Let me share a quick reflection. In the early 2000s, Nokia led the mobile market, but it fell fast, unable to adapt to the smartphone revolution. The lesson? Without vision and reinvention, even giants can fall. Now think about this. Where will your company be a year from now if you adopt AI today? At MexMoves, we're seeing real examples. Mexican companies combining their data with top AI models and getting results. A big consumer goods firm is saving hundreds of hours by automating orders and stock planning. A well-known retailer now uses AI agents as control towers, generating reports across all its stores and warehouses. What do they have in common? Arcam, a Mexican-built AI and data platform developed by a world-class team. Imagine a ChatGPT-style tool trained on your company's data. Fast, accurate, reliable. That's what Arcam delivers. Data integration, decision-making with real metrics, and tailored AI for real operational solutions. What would Nokia's story be with a tool like this? More importantly, what will your company's story be if you adopt AI today? Request your demo at arcam.tech/whitepaper.
Hello everyone, welcome to Mex Moves, a weekly podcast on Mexico business and finance. This is Damien.
Hi everyone, this is Eduardo. We have an interesting show now, Damien.
That's right. Today we have an interview with Rahim Bhaloo. He's the founder and CEO of JOi Dollar Plus, the dollar store chain that's growing rapidly across Mexico and is listed on the Toronto Stock Exchange. And Eduardo and I are going to talk about the big news of the week, the U.S. Treasury's sanctions and accusations against Vector, CI Banco and Intercam. And we'll also take a look at Fox Corporation's acquisition of Caliente TV as it grows its sports franchise here in Mexico. And we'll talk a little bit about the possible modifications to the muted remittance tax. So, Eduardo, how are you seeing the big news of the week, the U.S. Treasury accusations as sanctions against these three Mexican banks and brokers?
Well, I guess it took everyone by surprise. These are names well known in Mexico's financial circles, probably not known for everybody, but those of us who follow Mexico's business and banks and brokerage houses, the news that they are allegedly by the U.S. Treasury Department accepting funds from operations that are illegal, either from transactions done by those that sell fentanyl or other drugs, or by aiding the payment to Chinese precursors of the chemicals which are later used to produce fentanyl. It was quite, or it is still quite a shocking announcement. There is no fine or anything like that in these accusations, but it's much worse, I think, in the sense that the three institutions, which are CI Banco, Intercam Banco, and Vector Casa de Bolsa, they won't be able to have any transactions with their counterparts in the United States in 21 days after this decision reached by the Treasury Department, its unit of inspection or monitoring of these illegal operations, is published in the Federal Register. So there is a 3-week window of opportunity for the Mexican institutions to try to see if they can convince the authorities that the accusations are baseless or that they have the capacity to probably install greater monitoring or alert systems to prevent this from happening again. Because the numbers or the amounts of money that were found out by the U.S. authorities are quite small, if you ask me, Damien, in terms of the volume of trade that happens between Mexico, the United States, Mexico, China, the U.S. and China. So the numbers are small, but the repercussions are very, very large for these institutions if they lose their capabilities of doing transactions with their counterparts in the United States. Obviously, the three companies came out immediately and denied that they had done anything wrong. The Mexican authorities also said that they have no evidence, that everything is hearsay, if one wants to put it that way, because the authorities are not presenting or haven't handed out the evidence to the authorities in Mexico. It's quite serious, I suspect, for the reputation of the Mexican financial institutions overall, and in particular for these three companies, which are not huge. They're mid-sized banks. Cibanco is ranked between 15 and 20th in Mexico's list of 50 banks, while Intercam is between 20 and 25. So they're not huge, but people know them. They have a capitalization value of 7 and 4 billion respectively. Vector is a brokerage house, as well as a small brokerage house, but very well known up in the north. My take is that it comes as a big surprise. It evidently shows that the United States is very concerned about this issue. I don't know if this was the way to alert Mexicans that they were monitoring these transactions by sanctioning these three institutions where a lot of people work and where a lot of people have put in their lives to build them up. So it's quite a shocking and unexpected news. We'll have to wait and see how the companies deal with the U.S. authorities, how the Mexican authorities help these banks deal with the U.S. authorities. And but the time frame for reversing this is quite short and very unlikely, according to some people. So I don't know. What do you make of it, Damien?
No, I mean, I think, first of all, it's a big blow to Mexico's financial system. I mean, it's a huge blow to these three companies that have a very short time period to get themselves out of this situation if they can. But it's also a bigger blow to the whole system because, as you said, they're relatively small transactions. I think if you dig hard enough, probably every Mexican bank has inadvertently facilitated a FX transfer between, illicit entities either in China or within Mexico at some point. If the illicit entities are clever enough to hide their true origins, it's quite a difficult thing to avoid. And especially when FX itself as a business is very low margin, there's only a certain amount of KYC you can do with the revenues generated from the business. So I think, secondly, the Trump administration has a lot less credibility than previous U.S. administrations. They politicized, a lot of decisions, whether it's with the universities, the attack against Harvard, now this, often with quite baseless accusations to further their political goals. So we need to interpret what the U.S. is saying with that understanding and with that context. And maybe because of that, so far at least, the Mexican government has been pretty kind of strong, showing down in a morning press conference on Thursday, saying that they haven't seen evidence of these accusations and some of these Chinese companies that they were allegedly facilitating FX transfers, in the Mexican eyes, are legitimate companies. Third, unfortunately, it's very difficult in Mexico for any financial institution to exist long-term without access to the U.S. banking system. And in addition to that, other banks, knowing that you're very vulnerable if you lack access to the U.S. banking system, may well cut kind of credit lines, which will force these companies to look for liquidity. And that, itself will create. So the perception of a problem in a bank or a broker can create, a real problem, even if the perception itself isn't well founded. So I think the Mexican government, may well end up having to help these entities with liquidity or some other measures while they show that they were acting in good faith, and that many of these accusations are groundless, because the market response to these accusations is going to put them under a fair amount of stress. I think to the extent that these entities run into problems because of this, people are obviously going to look at other smaller Mexican banking institutions and say, well, I don't want, to be sitting around holding their assets or holding their bonds or whatever it might be, if they run into similar kind of problems. So you may see a flight to quality throughout the banking system, where the end clients move to the sort of the top 7 banks for prudence purposes, and that flight to quality could cut a credit in the economy, because even though the banking system is very concentrated, the mid and smaller sized banks still play an important part in providing credit, which is already very low in Mexico by international standards. So say Banco, I think its loan portfolio is 16 billion, 800 million or so. Intercam 23 billion. And so there's, if you add that up and then multiply it to the other banks out there, this could help drive a contraction in credit throughout the market. So I think there's going to be a lot of challenges for these entities. I think there could be a spillover into other entities. I think the Mexican government, the Hacienda, is probably going to have to get involved in ensuring that there isn't any kind of negative effects that then impact the broader economy. And I think that the U.S. Treasury needs to provide more information and data to prove what they're alleging, because these have real impacts on real people and on the overall Mexican economy, which itself will then impact negatively on the U.S. So I think there's a lot of things to worry about. JOi is a trustee of a bunch of FIBRAs, Mexican REITs, and people are going to have to sort of ask whether it makes sense for an entity that's facing these kind of consequences and not able to operate in the U.S. market if it's withheld is a sponsor. So both JOi and Intercam are very, very large in FX. So presumably in the short term at least those flows are going to move to other places. But they're going to be very careful about what they take. So there's going to be a lot of consequences here, but the overall impact on the economy and the impact on credit, the impact unfortunately on FX spreads, it's all going to be negative, especially for sort of mid-sized Mexican companies that have a bigger challenge to sort of prove who they are and that they're legit. And trade with China is also going to get a lot more difficult, because any Mexican bank is going to say, I don't make that much money on FX with China. It's not worth the risk. So there's going to be real challenges, and there may even be bigger risks, and some of this money then just goes underground and isn't supervised at all.
Yeah, the ripples will be larger than probably the initial announcement for the recorporations. It might impact, like we both said, the financial system overall and the economy in the end. I think the central bank will also play a key role, Damien, in that liquidity element that you mentioned in helping the banks have access to liquidity as it will probably dry out as this goes on, and the capacity for them to reverse these accusations seems less and less possible. So it's a really tough announcement for those three companies and for Mexico in general. I think we will have to wait and see how far it spreads.
Well, just a few other things that caught my attention this week. Bloomberg had a story, another story, in fact, on how Mexico and the U.S. are getting close to a deal on a reduced tariff or a zero tariff on Mexican steel to the U.S., but with a cap, so a quota of tariff-free or tariff-reduced steel. Apparently, the quota is going to be based on 2015 to 2017 levels, around 2 million metric tons. That's compared to about 3.1 million tons last year. So that means that Mexico's steel producers would probably 80 to 90% of their current exports would be subject to this reduction in tariffs or elimination of tariff, and that's good for the steel makers. I think it's also good for Mexico as a nearshoring destination. It's also good for the U.S. car companies that are big buyers of Mexican steel would then be able to get them at these reduced tariffs. My guess is that the U.S. car companies are putting pressure on the U.S. administration that without this reprise, the car prices in the U.S. would go up a fair amount.
Yeah, and that they will be also out of competition with others probably. Although every imported car is paying a 25% tariff in the U.S. at the moment. So, but yeah, this will definitely help. That would be good news for Mexico versus what we were talking about earlier. So let's wait and see that this deal materializes and comes to fruition.
And then there's a further development on the remittance tax issue, which we've been covering off and on for the last few weeks. The U.S. Senate Finance Committee unveiled its version of the One Big Beautiful Bill, which includes a 3.5% remittance tax. But there's a difference. Remittances made through U.S. bank accounts, brokers, and debit or even credit cards would be exempt from the tax. So if the money's sent through a regulated financial channel, no new tax applies. But if you use cash or money orders or cashier checks, then you would pay the 3.5% levy starting beginning of next year. The Senate version does apply to U.S. citizens as well, whereas the House version only applied to non-U.S. citizens, but didn't have this exemption for regulated financial channels. So it seems like we're moving to a conclusion that's less negative for Mexicans that are in the banking system. But of course, they could give cash to someone in the financial system if they're not in it, who could then send the money to Mexico. So there are probably a lot of workarounds to avoid this tax for the most part, and maybe moving the money to the banking system isn't such a bad thing, especially given all of these money laundering concerns that exist.
But do you think this will hurt people or companies like Western Union and the ones that receive cash in their booths in the States and then give it out in electro stores or places like that where they have a little booth?
Yeah, I would imagine so. That if there's a 3.5% gap between going to Western Union or going to Chase, people, at least at the margin, some people will then will go to a bank or use an app through the bank. They won't actually physically go to a bank anymore, but so there'll be some migration from cash to the banking system to the extent that's possible, because obviously a lot of Mexican migrants in the US, probably most, are in the cash economy. So they may not have any choice unless they have a relative or someone else in the financial system.
If I understand, when the two chambers have different propositions for the same discussion or elements that they're reviewing, then there is a reconciliation later on between the two, and they come up with something that it's agreed by those that do reconciliation processes. Am I right? That's how it will work in this case?
Yeah, and there's way bigger issues
than the remittances, without a doubt.
It's basically tiny. I mean, relative to the fiscal issue of the deficit and all the other tax and spending issues that are being sorted out at this point. But for Mexico, for Mexican families and villages and towns that live to an important extent off remittances, and mostly in poorer parts of Mexico, this is a huge issue.
And you mentioned you were going to talk about the Caliente Fox transaction.
Yeah, that's right. It came out at the end of last week. Fox Corporation, the U.S. media company behind Fox News and Fox Sports, is acquiring Caliente TV, a local sports streaming platform and TV channel, and a link to the betting company here, gaming company. And it's quite interesting. Apparently about 3,000 hours of sports content is on Caliente. UEFA Champions League matches, some certain Liga MX games from Xolos, Gallos, Blancos, Tigres, León, Juárez. You have the CONCACAF Champions, some Premier League games, and so on. And so it's a bet by Fox on capturing sort of Mexican audiences that are transitioning from traditional sort of TV to digital, putting more pressure on Azteca and on Televisa, that obviously are using sports to hang on to their viewers. Now, it's quite complex because last year the IFT, the telco and media regulator, approved Fox acquisition of Fox Sports Mexico, the cable channel. So when Disney acquired different assets from Fox back in, I think, 2019, they were obliged by the Competition Commission to sell Fox Sports Mexico, and they sold it to Grupo Lauman, which has the same owner as El Financiero newspaper, and then Grupo Lauman sold it back to Fox. So Fox basically now will have, when the deal closes, the Caliente TV, and they'll also have the Fox Sports Mexico. So they're going to be, very, very credible in sports in Mexico with these different assets. And apparently Carlos Martinez, who was previously at Turner, Discovery, Fox Latin America, is going to be heading the operations. And they're, basically betting big on this combination of digital platforms, legacy channels, premium sports content to to take on Televisa, which has traditionally been dominant, and Azteca.
Right. It's one of the few elements of TV that keeps on generating, well, not one, but viewers. And as we've talked, streaming platforms have taken away a lot of the viewership of Televisa and TV Azteca. So that other segment, the sports segment, keeps on generating apparently interest, and might still, or it still is a good business model for those that broadcast those sporting events.
Do you watch a lot of sports on TV, Eduardo?
That's the only thing I watch on TV, to be honest, Damien. I did spend 5 hours on a morning on a Sunday watching the French Open, and I thought to myself, what am I doing spending 5 hours in front of a television? But it was a great match, I gotta say. How about you?
I like to watch tennis. I don't watch a lot of Mexican soccer, to be honest, and I watch some sort of Champions League and Premier League stuff, but not a lot.
There's too much, and you spend too much time somewhere. I mean, you can find any baseball game of America now on television. It's incredibly the selection is incredibly large, and the time you would spend can be larger than ever.
Yeah, well, Fox is becoming a big player, and Fox has done very well, under Trump on the news side, and the stock has performed very well. And now they, having kind of sold assets and then reacquired them, they're back to being a kind of major player here in Mexico on the sports side. So this week our guest is Rahim Bhaloo. Rahim is the founder and CEO of JOi Dollar Plus, the dollar discount chain expanding fast across Mexico. The company is listed on the Toronto Stock Exchange under its legal name Pesorama, and it's betting big on affordable, everyday products for Mexican families. Currently has about 28 stores, and it plans to grow big. And we're going to talk a little bit about why value retail is taking off in Mexico, how JOi Dollar Plus keeps its prices low and competes with bigger players like Waldo's, and the challenges of scaling in Mexico, and a little bit about Rahim's personal story.
So again, what brought you, or how did you came up with the idea of setting up these one price stores basically in Mexico?
It was a very accident opportunity and kind of blessed on how I'm here. But I've had a house in Mexico, specifically Playa del Carmen, for the last, call it 25 years. I've done various businesses across my life, and I sold my last business a few years ago and kind of retired. And I thought that was it. I was a young man at 37 years old, living in Playa del Carmen and, having just a great time. One afternoon, my wife turned to me and said, Rahim, we're going to a kid's birthday party and go get a gift bag to put the present in. So I jumped in my car and started driving and got into Walmart and Chedraui and Soriana and all these big box retail, grocery, large format stores to try to find this gift bag, which, should have been an easy find. But, it took me 2.5 hours, which should have cost me 25 pesos. By the way, that's the price we sell our gift bags at. Cost me double or triple that. And I came home. I threw the bag on the counter and got into an argument with my wife because I wasted 3 hours of my day trying to find this gift bag. And I'll give her credit. She turned around and said, Rahim, you should really look at the dollar store business in Mexico. And I said to her, I know nothing about dollar stores. And second, I really don't know about business in Mexico. But that moment kind of stuck in my head. And as I was traveling, growing up in Toronto, we have a very large retail format, dollar store format operator here called Dollarama, which has been one of the most successful dollar store chains in the world and probably the best operators. And I realized something very quickly that, Canada, with about 37 million people, has about 1,700 Dollaramas with a view that they can open up another 500 or 600 stores, which means that they have a footprint of 22 or 2,300 stores in this market. And I looked at Mexico and I saw 135 million people and nobody really doing dollar stores the way we know it, organized, clean, assortment of 5, 6, 7,000 SKUs across all the departments and selling good quality product, at 20 to 50% cheaper than the incumbents. And that's when the idea was kind of born. And I jumped on a plane, went to Mexico City, and I said, okay, I think I found myself my next opportunity. And that's how we ended up with JOi Dollar Plus.
That's a beautiful, beautiful story. Out of need, you came with a business model. Obviously, did you have any previous retail experience?
I did, right out of high school. So now I'm dating myself. Some 30 years ago, I was in the retail business doing high-end cafes. And really, I taught people in Toronto how to drink cappuccinos and lattes when nobody knew what they were. So I owned a chain of retail cafes, and I ended up selling them and did very well and cashed out. So that was my dip into retail. Then I was in real estate development. I sold that to a public company. And then I kind of did nothing for a while until this idea came about. I'm very excited of what I see in Mexico and the opportunity, especially with what we're doing. I think it's disruptive retail. People are liking what we do. You know, really doesn't matter what neighborhoods we're opening in, whether it be the Lomases, the Condesas, the Iscalis, the Chalcos of the world. Everybody wants value proposition today. And I think that, you know, the world has changed and people are looking for value proposition. So it really doesn't matter what income neighborhoods we open in. The matter of fact is that we have a product that people are looking for. You know, as I said, across 26 different departments. We do seasonal like Christmas, Halloween, Mother's Day, Father's Day, your general merchandise. And we bring in a lot of new items on a monthly and weekly basis. And that's really the dollar store business. It's the treasure hunt when somebody's coming in to buy one item and they end up usually leaving with five. And that's really the success to this business.
So location is not necessarily, in this case, the key factor, would you say?
I think it is and it isn't. And I'll tell you why. You know, with Mexico City and surrounding 25 million people, you really need to build brand awareness. So, you know, we're a young company, 28 stores. People know who we are. But as we continue to expand that footprint, location won't matter as much as it does today. So, you know, our real estate strategy is pretty simple: 50% shopping centers and 50% standalone locations. And that's how we see expanding probably 400 to 500 stores in the next 5 to 6 years.
But in the shopping mall arena, there are some that are located in middle-class neighborhoods, others in high-end neighborhoods. Is there any difference? You just mentioned that there wasn't, that anyone wants a value proposition. So in that sense, any shopping mall, or would you be targeting someone?
Honestly, I think any shopping mall with high traffic, any standalone location with high traffic, and obviously Mexico City offers that. So, you know, whether it's a high-end neighborhood or medium or lower income neighborhood, it doesn't really matter. What does matter is the ticket size might be different in terms of how much people are spending and the frequency of shoppers. So in a higher income neighborhood, we might see the same customer coming in once a week. In a lower medium, income neighborhood, we might see the same customer 2 or 3 times a week. Sure. So at the end of the day, they all pan out in terms of sales on a per square foot basis, but the frequency of the customer may change and the basket size may change. But the product is a product. And, what we've learned in Mexico is that people are looking for value proposition. And when they come into our stores, 5,000-6,000 SKUs, varied across housewares, cleaning supplies, consumables, home repair, pet, health and beauty, Christmas, Halloween. They're looking at these products, which 80% of our inventory is less than 50 pesos. So that is really what the value proposition is all about.
And this element of the treasure hunt, the capacity to surprise your customers with goods that they hadn't seen before and that they will probably not see afterwards, is that also a key component, would you say?
Absolutely. A customer may be walking in to buy a cleaning supply or maybe in for one specific item. But as we bring in goods on a weekly basis, they come in and they say, wow, I never thought I would need this item. And it's an impulse buy and something that they've never thought about. And that's really the treasure hunt. So typically they're coming in for a item or maybe 2 items. And what ends up happening, they walk the store, they go up the aisles and they start picking items that they never thought they needed or required. And that becomes really the value proposition and treasury combined.
Great.
Because they're affordable items. I mean, 50 pesos and under, a lot of our product is 25, 30, 35 pesos. So it's almost like a no-brainer. They're walking in through the store and, wow, I didn't know I needed that. And they might grab that.
Yeah, even if you don't think you wanted to buy something for 25 pesos, your impulse will probably let you go and put it in the basket and pay at the cashier at the end.
Absolutely. And that's why they come in for an item and, the average person leaves with 5. And that's really what happens.
Now, Pesorama is listed in the Toronto Venture Exchange. Am I right?
Correct.
How has it been a public company in Canada shape your growth plans here in Mexico? And the stock hasn't been doing that well. What's your take?
Yeah, look, I think the purpose of going public was to raise capital in Canada to really deploy in Mexico. And that was the thought process and still is a thought process. I mean, there's not a lot of liquidity in the stock. It's kind of tightly held. I think at the end of the day, we are a public company. There's, the pros and cons. It allowed us to raise the capital that we needed initially to expand. And we're currently raising capital now and have been very successful at doing that. So far, it's served our need. We haven't really used the stock as currency, as a lot of public companies do for acquisition or otherwise. But I think the markets are coming back, and you'll see a rally in the stock. But at the end of the day, it's all about expansion. The more stores you open, the stock will look after itself. So we're a young company, 28 stores. Wait till we get to 100. You'll see the share price move.
And I assume that the shareholders are looking at the bottom line or your numbers in generally. They're not actually asking you to do something differently because you're in Mexico and they're in Canada. Am I right?
Yeah, look, a lot of our shareholders are long. When you get into a startup, if you will, you're taking a gamble, right? And in this case, I think the business model has been proven. The thesis is proven. Dollar stores work all over the world. As I mentioned earlier, Dollarama has, 1,700 stores with a view that they can open up 2,300 in Canada, population of, 38 million people. So in Mexico, we sit with 135 million people, 28 stores. I think we've proven the concept now. It's all about rollout. And, you look at other countries in the world, you look at Europe, you look at London, Poundland, 2,000 stores, Fixed Price in Russia, 6,000 stores, Daiso in Japan, 5,000 stores. Right. So the business model is proven. It's all about the private label, the offering, the assortment, and serving that need at a value, which we do. So in terms of my shareholders, most are long, and they're betting on the fact that one day we'll have 300, 400, 500 stores, and that's where you see a real stock price.
Now, beyond Mexico City, you've expanded to Pachuca, Cuernavaca, Zumpango. What have you learned about taking the discount model into smaller cities or suburban markets in Mexico?
It actually works very well because there's less competition in those markets. Usually you have one incumbent retailer, which is your Walmarts of the world. So when they walk into our store and they look at the price and the offering, it actually bodes well. So the smaller markets are very good. And I think we've learned that from other, discount retailers. And, I think 3B, is a good example of that in Mexico, hitting smaller markets and, opening that footprint. And that's been a real huge success on the New York Stock Exchange recently.
Does that create logistics problems for supplying your stores?
As long as the stores are within I'm going to call it 2 to 4 hour radius from our distribution center, we're fine. The minute you cross that 4 hour mark, it becomes difficult where you need to have a regional distribution center to service the store. So anything 4 hours outside of Mexico City, we can service no problem.
So I assume that the distribution centers will also grow along with your growing plants in other parts of the country, right?
Correct. And you need that. So if we were to, for example, go into Guadalajara or Monterrey or other markets, you would need a local distribution center to service that, to service those stores. I mean, we, with 28 stores, we deliver somewhere around 15,000 cases a week to these stores. So it's high volume. And you need to have the distribution center very close so you can service those stores. The deliveries every week, and in high season like Christmas, you're doing two deliveries a week to each store. So that case count can go to, with 28 stores, only 25,000 cases a week.
Right. Now, there is some competition from players like Waldo's and maybe Miniso, that they have a different model. And
look, Miniso, very close friends of mine. But look, I think Miniso is a very different model. It's more lifestyle driven. It caters to a different market. We're general merchandise, right? So at the end of the day, think of us as a mini Walmart, right? We're 5,000 square feet, call it 500 meters or 550 square meters of a footprint. It's almost coming into a small Walmart where you're finding all of your stuff and you're in and out. Waldo's, I think the model is very different. They initially started as a dollar store. They now have clothing. They sell motorcycles. They sell bicycles. I wouldn't consider them a real dollar store. So from a competition perspective, I think we're unique. As I said to you, our value proposition is 80% of our product is under 50 pesos. So very different than what you would find at Miniso in terms of price as you would at Waldo's.
Right now, Dollarama, the one you mentioned at the beginning, is planning or says that it's coming to Mexico. Does that worry you or not at all?
Well, listen, I think it's a good thing. I think it'll allow the market to get educated. When we looked at Mexico as a market, the white space potential is 5 to 10,000 stores. As I said, in Canada, Dollarama operates, 1,700 stores with a view to open 2,300. So Mexico is a big market, and I think it's going to educate the consumer. And basically, I think it's a good thing that, it's okay to be number one or number two or number three in a market the size of Mexico. So, I think I welcome Dollarama coming in because it's going to change the pattern of how people shop and the value proposition that they'll offer.
The cake is big enough for everyone to enjoy the party.
There's Coca-Cola, then there's Pepsi, and, they seem to be both okay, right?
How does a dollar model or a dollar model retail operate in terms of pricing? I know these goods are produced cheaper. It's hard for me to entertain the idea of setting one price for all these goods or 3 or 2 different prices. If you can explain to the listeners how do you work your pricing?
So look, 60% of our product is import. We import from China predominantly. We have an office there. We do business in Turkey, Pakistan, India, Vietnam, etc. And it's all about volume, and it's creating that private label and having relationships with the various factories and trading companies that we've had for a long period of time. And it's really that's the essence of the business. It's all about the supply chain, right? Anybody can build a retail store, but can you get 5,000 to 6,000, maybe 7,000 SKUs in your store, of which 60% are import, privately labeled, manufactured for you, and still hold a 47 to 48% gross margin? That's the secret sauce. And that's what we figured out.
I don't think you'll bring the Chinese products through the U.S., are you? I mean, you'll bring...
No, we bring Chinese products right into Mexico. We bring products from Vietnam, India, Turkey. No issues. I mean, Mexico is not in a trade war with China. And, at the end of the day, it's unfortunate, but if tariffs do go up, it's the consumer that's going to end up paying for it. And we've seen that already with Walmart and Target in the United States. So I'm hoping that Mexico does the right thing, and it's all about providing that value to the consumer.
Now in Mexico, the government is trying to encourage people to change their supply chains to locally produced manufacturers and producers and suppliers. Do you see any chance that will also help you purchase from Mexicans?
Sure, we do. As I said to you, 60% of our goods are import, 40% are domestic. So domestic supply is a big part of us, and we rather work with domestic suppliers. But it all boils down to the price. And there's certain things that Mexico is really good at, textiles being one of them. We have a lot of product that we do in terms of textiles through Mexico, consumables. And where we can, we private label in Mexico. It just, nobody can compete with China when it comes to price. That's the reality.
No, it's a factory of the world. It's been that way for I would say probably a couple of decades. But there is a pushback to that from the U.S. mainly. And Mexico is within
But who's going to suffer, right? I mean, the
No,
pushback
I agree.
sounds great. All these things sound really well, but at the end of the day, the CEO of Target, the CEO of Walmart, what do they say? Be prepared for a 25% increase in price. So the consumer is gonna pay for it. That's the sad part.
No, without a doubt. Now, I don't know if in China the practices are all that market friendly, but that's beyond the scope of a retailer, I gather, in a certain moment, no?
Look, dealing in China, dealing in Vietnam, dealing in India, all of these countries, at the end of the day, we're very careful on who we buy for, but they manufacture for the world, the Walmarts, the Targets. I mean, even in Mexico, the Chedrauis, the Liverpools, the Coppels, they all have offices in China. Without China, very, very difficult to be a retailer in today's world.
Yeah, and difficult to compete with them in that sense. They mass produce, and it's hard to accomplish what they have.
Absolutely. And I think look at Walmart. That's a success story of made in China, really.
Correct. Rahim, anything else that we haven't covered that would you like to mention about your strategy here in Mexico and your growth plans? Anything?
Look, I think we're very fortunate to be in the moment we're in. I think Mexico as a country, I mean, we love Mexico. We're very bullish on Mexico. I think there's a change in terms of the middle class starting to emerge in this market. I think that, what we're looking to do, 500 stores in the next 5-6 years, very feasible. And so far, our thesis has been correct. It's a great market, great opportunity, and our value proposition is working. So, yeah, just look out for us. JOi Dollar Plus will be coming over to a neighborhood near you.
Well, on that note, thank you, Rahim, for the time you've given us.
Thank you very much. I really appreciate it.
Great. Well, that's it for this week. Thank you for joining Mex Moves.
Thank you, everyone. Don't forget to subscribe. Let me share a quick reflection. In the early 2000s, Nokia led the mobile market, but it fell fast, unable to adapt to the smartphone revolution. The lesson? Without vision and reinvention, even giants can fall. Now think about this. Where will your company be a year from now if you adopt AI today? At Mex Moves, we're seeing real examples. Mexican companies combining their data with top AI models and getting results. A big consumer goods firm is saving hundreds of hours by automating orders and stock planning. A well-known retailer now uses AI agents as control towers, generating reports across all its stores and warehouses. What do they have in common? Arcam, a Mexican-built AI and data platform developed by a world-class team. Imagine a ChatGPT-style tool trained on your company's data. Fast, accurate, reliable. That's what Arcam delivers. Data integration, decision-making with real metrics, and tailored AI for real operational solutions. What would Nokia's story be with a tool like this? More importantly, what will your company's story be if you adopt AI today? Request your demo at arcam.tech/whitepaper.